Thanks, Anton. Hi, everyone. And it's my first show of the year, so a belated Happy New Year to everyone. My name is Rosie Hewitt. I am founder and CEO of Rosie's People. We are a global HR leadership and business operations consultancy. We support startups, scale-ups, and enterprise businesses with everything people and business operations related. My do's and don'ts. I think let me shake it up a little bit this year. So I think often people tend to hire a lot for skill. I think my do's would probably be around try to hire for mindset as much as skill. So look for adaptability, learning speed, people who are comfortable with ambiguity, because there's a lot of that in a startup. Skills can be taught, mindsets usually can't be taught. And be upfront about what stage you're at, what pace you're traveling at, what constraints you have. The right people are attracted by honesty, not polish. My don'ts would probably be don't hire people purely based on big company CVs and brand names. Some people work in big, brilliant companies, but they may struggle in an environment without structure, which tends to happen in startups. So they're used to having resources, they're used to having certain parameters that they work within, structure, etc. So don't get razzle dazzled, I guess is what I'm trying to say, and don't oversell the role of the vision. And I'll stop there and I'll hand over.
Thank you very much. Margaret's gone AWOL for a second, so maybe we can go to Jeff, then James, sure. And hopefully by that time, Margaret will be back.
Cool, absolutely. And yeah, again, Happy New Year to you all. It's my first trip back here with Anton and the illustrious gang. My focus will be on things related to artificial intelligence, AI, the use of AI in the realm of HR. So my quick list of things to do is to not start, but actually start with real business problems that you're trying to solve, and then basically pull those apart and use AI basically where the work is slow or repetitive or not particularly clear. It can really help kind of like clarify that for you. Build AI literacy across all your teams in your organization. This is the year that AI gets real in the workplace. Last year was experimental. Lots of people trying things that didn't work, but learning like crazy. And this is the year I think that that AI really kind of takes hold. Things to avoid: don't chase shiny tools. There's a lot of hype out there in the market. You know, talk to folks, tools owners and vendors and so forth who have lots of real world experience that you can call on, and get some proper references to make sure that you don't just kind of enter into things blindly. Always ever be careful about you know, data sensitivity. make sure that you are being extraordinarily careful in terms of how it is you engage with AI. If you have any questions about it, reach out to people like me. More than happy to talk to you about it and ensure that you don't blow something up accidentally. And otherwise, don't silo AI with just a tech person. AI is meant to be democratized, meant to be used by all of us, for all of us, to get a lot of amazing things done. So that's my hopeful quick list here for the beginning of 2026. And yeah, I'll flip it over next to James. Is it? Yep, James.
Amazing. Thanks so much, Jeff. So yeah, I'm James Peters, based here in the UK. I currently work for Cisco as a talent sourcing manager, hiring across the EMEA for technology roles, predominantly sort of AI, machine learning. Previously, I've worked for Meta from a research perspective. I've also worked for Microsoft in the past, so have some sort of large company experience. But I've also had 5 to 6 years working with startups, predominantly in London, but also in some other locations like Sweden and Finland before. Predominantly Series A startups just after funding, helping them build out their first product and engineering teams. But some are up to Series C as well. And I have also consulted for an incubator in the past and helped seed businesses as they look to start putting some processes in place. I think for myself, a little bit around sort of do's and don'ts. So I always say do hard for pressure, not just for potential. So look at past performance, look at how under stress, that sort of predicts future behavior. Do define the problem before the role. So I always say that clarity beats headcount. Always hard to solve a specific bottleneck you currently have. Do slow the decision, not the process. So I always talk about fast pipelines, thoughtful in final calls as well. Do test for ownership, especially in the startup space. And hires, I would always say, don't hire to relieve sort of personal pressure. So urgency always creates expensive regrets in the future. Don't confuse confidence with competence. So look at value, not just the substance. And don't overvalue pedigree. So startups can break people. I've seen that before. So look at people who have had experience in startups previously is some advice I would have. And I will now pass to Margaret.
Hi, everyone.
Very much.
My name
Margaret,
is
are you
Margaret.
back? Yeah.
Yeah, I'm speaking. Can you hear me? Can you hear me, Anton?
Yeah, yes, we can. Sorry. Yes,
Okay,
we
great.
can,
Yeah.
Margaret.
So, hi, everyone. My name is Margaret Boy. I have been working in the talent space for 20 years, primarily as a recruiter, hiring for tech companies, so both startups, Series A, B, C, and D, and also large tech companies. I've hired across all different functions and levels and also in many different geographies in Europe, US, Latin America, even in Africa. And apart from that, I do a lot of interview training and coaching. So in terms of one do and don't, so one do would be to hire for potential and problem-solving ability and not just experience. So in early stage startups, in my experience, roles evolve faster than job descriptions. So you need people who can learn quickly, who can adapt, and who can actually figure things out with limited direction. So in practice, that just means looking for transferable skills rather than one-to-one role matches. Even like asking questions like, if you joined next week, how would you approach growing signups with no paid budget if you're hiring a marketer, So, and also like assessing ownership, how they talk about past work. Do they say we or I? Do they, show initiative? So in general, my experience, startups change direction very often. So someone who can only operate within the fixed process will struggle. So you need someone who's curious, who's adaptable, and who's a problem solver. And in terms of don't, I would just say like, don't just hire reactively just because you are stretched thin. Typically reactive hires almost always cost more time and morale later. So before opening a role, just ask yourself, what problem will this person solve, and how will we know they've succeeded in 6 months? And if you're unsure, just hire a contractor or advisor short term to validate that need. So that's it from me.
Wow, that is amazing. Thank you very much, Tim. Really appreciate that. Well, you've heard them, everybody. We've got some amazing people with us today. They're going to be here for the next 45 minutes now, 44 actually. So if you do have any questions in terms of finding and keeping the right people for your startup, or perhaps you want to know about how much to pay people, how to interview them, how to empower them, how to build the right company culture, and all that jazz, this is the place to be. The way we run this is quite straightforward. If you're on our call here on Microsoft Teams, you simply drop your question in the chat. We give you the mic, you introduce yourself, and then fire away. If you're on the live streams, though, please be aware that unfortunately we are unable to monitor your questions there. So you'll have to join us live here on Microsoft Teams. And the quickest way to do that is to go onto our website, startuptoscaleup.club. So again, it's startuptoscaleup.club. You scroll down a little bit, you'll find today's question, today's session rather, which is Startup Talent Q&A 179. You click join, it's a quick registration. That gets you a way for you to go and register on Luma. And on Luma there, you'll find the link to tune in. Being audio only means you can tune in from anywhere via any platform or device. And again, there are no wrong questions, so please do feel free to type in your question, and then we'll give you the mic and introduce yourself and fire away. So we'll go on to our first question. This is from somebody in, where are they? Brighton. Okay. So we're running a seed-funded health and wellness startup in Brighton where we develop online mindfulness programs for corporate clients. I'm noticing gaps in our ability to engage remote employees effectively. Many team members express feelings of isolation, which impacts their motivation and productivity. Given that we operate on a limited budget, what cost-effective ways can we implement regular engagement practices to support remote well-being? How can we also create a structured feedback loop that allows us to gauge their satisfaction and identify potential issues early? Right. This is an interesting one. So they're a company that provide well-being, but they want to know how to provide well-being to their own workers. Interesting. Okay, so engagement basically for remote well-being. Shall we start with Rosie, then Jeff, then James, and last but not least, Margaret? If we can take about a minute each, please, team, that would be great.
Thanks, Anton. Yeah, it's ironical that you have a well-being company that is in effect looking for a well-being solution. It's a really common issue in remote teams where there's an expectation that people should somehow be quote unquote fine. The reality is isolation creeps in unless you design against it. If you don't actually take intentional steps to design a working flow, a working culture of a remote or hybrid team that deals with this issue, it will keep coming up. On a limited budget, what would come to mind would be effective things that you could do would be creating predictable human touch points. What that means is regular lightweight one-off initiatives, maybe not so one-off, but they should be regular. For example, weekly team check-in, optional virtual coffee chats. I mean, we use previous companies. I always advise we'd use like Slack. Have like a weekly event that sort of gets everybody involved virtually. We created something like that when I was at Kuda, and rotating peer catch-up so people touch base with each other. It doesn't really cost anything, but it does create connection, and also make sure the work itself feels connected. You know, use shared planning session, visible goals, collaborative tools, so people can see how their work fits into the bigger picture. Isolation isn't just social, it's also often about not feeling impact or not seeing how you're impacted. So on feedback, keep it simple, consistent, quarterly anonymous pulse surveys, 5 or 6 questions on workload, well-being, clarity. And support, these are far more useful than long surveys that nobody really wants to complete and people often see as a chore once they see how long it is. If you pair it up with regular one-to-ones, focus not just on tasks, but on how people are actually doing and how they're coping, that's going to help you. The key is closing the loop. So when people give feedback, tell them what you're going to do with it. Even small changes can build trust. And my 1 minute is more than up. Over to you.
Cool. Thanks, Rosie. It's Jeff here. Yeah, I was going to actually pair a lot of things. I think it's important to remember that this stuff doesn't need to cost money. What it will cost is time, and it will cost your sense of being present and authentic with people. But it starts with basically, to Rosie's point, sort of an architecture, a structure that says this is how we engage and connect with each other, however it is you want to frame it. And basically, it starts with the manager direct report relationship. You guys should be talking several times a week. There should also possibly be a buddy system, right, where you have somebody basically who's likely not in your department, is working in another area, another space, but you guys can say anything to each other. You can work with each other and kind of deal with all sorts of things that typically, I don't know, you might feel funny about, kind of talking to your manager about, or whatever the case. But I think that's an important thing as well. I think rituals, human rituals, are really important, to help a tribe basically, stay a tribe, an effective tribe. So I think, look, Friday afternoon rituals are a lot of fun. Do basically, if you're working remotely, pizza and beer at home or whatever the case, but everybody basically has like their best story of the week. And they, kind of pepper that with, this is how I dealt with it, whether or not that worked or whatever the case. Or it could be something funny and something about people's families and personal lives and things of that nature if they're happy to share it. You have to make this environment human. You have to make this a place where people love being, because they are so true to each other. Because even though they're physically remote, they are omnipresent and always ever ready to connect. So it's important that you don't let out of sight, out of mind start to take over. That's a very, very natural challenge, because we all get busy. We, especially in small companies, we are doers and we are managers at the same time. And it's really hard to kind of find that balance. But it's super important, basically, for people to know that you are always ever at the end of a click, and you can be reached and talked to face-to-face, online, and things of that nature. And then, I think Rosie has a very good point, too, about the pulse survey thing. You got to keep on top of this stuff, but spice it up, make it funny, make it interesting, but useful, and make sure you're kind of tracking a set of metrics. You might ask about different things each month, but you're basically tracking a similar set of metrics so you can kind of measure properly year over year, or month over month, or quarter over quarter, whatever your cadence is. That's all. But I think that's the way you probably should handle it. I'm out.
Amazing. Thanks, Jeff and Rosie. And I think my sort of answers to this is probably going to be slightly aligned as well with what you've already heard. But yeah, I think from my sort of experience, a remote disengagement is really not a motivation issue. It comes a little bit more around connection and clarity. So my suggestion would be, running one sort of fixed weekly team reset. Keep it sort of 15-20 minutes. Just ask 2 questions. Kind of what feels heavy, what feels clear. Look at sort of reducing that isolation fast. Another one, which obviously has been recommended already, but create connection in pairs, not groups. So kind of rotate people on a kind of a 15-minute sort of peer check-in. Could be every 2 weeks. There's no agenda there. It's just sort of connection. Because I have a coaching background, then there's going to be an element of sort of coaching which I'll lead into this. But I'll look at sort of regulation. So maybe starting meeting 60 seconds breath work. It costs nothing, but it improves presence dramatically. And then what's already been discussed, using bi-weekly pulse questions. What's draining energy right now? What would make next week easier and better? Just sort of track patterns which you see, track feedback. And I think isolation starts to drop when things become a lot more human and a lot more responsive. So that would be kind of my short answer for that.
Yeah, so I think everyone mentioned some great points already that I was going to mention, but just trying to think of something different. I think potentially one like underrated lever is visibility of impact. So remote people, they feel isolated when they can't see how the work matters. So perhaps creating a simple weekly impact log in Slack or Notion, where each team member posts one thing that they shipped or one customer insight they learned or one thing that they need help with. So it takes, a couple of minutes, but it creates momentum, recognition, and also cross-team awareness. And you can maybe also run like a monthly customer reality check where you share one client email, one testimonial, one renewal risk, one usage trends as an example. So like when people feel close to the mission and customers, motivation rises as well. Another one that you can try is instead of having these random social calls, which I don't want to say random. We use Donut on in Slack. I think it's great, but you can also try something that's slightly more structured, like a structured collaboration by design. So you can maybe set up recurring 30 to 45 minutes, like kind of co-working sprints. Camera could be optional, where people work silently and then they spend the last 5 minutes sharing what they got done. So something like that can reduce procrastination. I think it builds a sense of togetherness and it doesn't require any extra energy. You can maybe also introduce some working agreements for remote communication. So for example, response time norms and how decisions get documented and when to async versus meetings. So a lot of isolation is really just also confusion and friction, And just one last thing, I know others talked about the surveys as well. I think surveys are great, but I would just say that for early issue detection, you want to use more like a red flag check rather than those generic surveys. So, we use Typeform and they're great, but maybe just asking something, how sustainable is your workload right now from 1 to 10? How connected do you feel to the team from 1 to 10? And then, and just last question, is anything feeling risky or unresolved? So just 3 questions. And then, follow up when scores drop. I think the power is not so much in the survey, but it's just in the constant consistency and the response. So, remote engagement isn't just about more socials. I think that would be amazing because I work for a remote company, but that's not always possible. I think it's also about clarity, visibility, and shared progress, so people feel connected to outcomes and not just Zoom calls.
That is amazing, team. Thank you very much for that. We'll now move on to question 2. It is in the chat in case the panelists would like to refer to it, but I'll read it out loud for the live streams. Okay, these people are in London. They're building an AI-driven investment platform. They're planning, or they're hoping rather, to go for a Series A raise by the end of the year. Background is that the main founder, it used to be a hedge fund manager. Problem, it's retaining top talent after a funding round. Question, how do I ensure my employees don't get poached by bigger players after we close a high profile funding round? And then he sent another thing after it saying, I've seen that happen in other startups that I've actually worked in before. So how do you stop that? Shall we start with Jeff, then we go on to James, then Margaret, and last but not least, Rosie. And again, if we can keep it to about a minute each, please, Tim.
Sounds good. I will do my best, Anton. Wow, this is a super important problem. I forgot to, in my introduction, share the fact that basically as a consultant over here in the UK, an American living outside London, I've worked with, gosh, what am I up to now? About 19 different organizations that have all been on sort of the startup scale up, mostly scale up routine. So I've seen this happen a lot where you get a funding round and suddenly the spotlight just whizzes around and shines brightly on your entire organization because your Series A, Series B, Series C, whatever it is, just came rolling in. It's in the millions. It seems like all the money in the world and that everybody got instantly rich and everything else. And often what happens behind the scenes is that money was, for the most part, almost always ever accounted for in terms of some level of investment. It's not like that money was just sitting around waiting for people to kind of run by and fill up a bucket. But this is a mistake oftentimes that senior leadership make, because the level of expectation from the employees is, hey, we're still part of something really special. Investors thought so. That basically makes me feel like, okay, well, what's in it for me, to a degree. I love my people. I love working with my peers. This is a great place to work. But end of the day, recruiters are suddenly hammering me and saying, well, you're part of this company. It's super successful. How would you like an opportunity where you get paid double? And that's the kind of crazy stuff that happens in fintech world. So that being the case, quick advice is you don't basically retain your people by hiding them, right? You got to figure out how to deepen your level of commitment with them. And basically after a big funding round, what your employees want to hear is clarity, ownership, and growth. They basically want to know, what is this going to do for me in terms of this? And that means, taking a look at giving people meaningful equity refreshers, a bit of a boost themselves for, number one, sticking around. Number two, working crazy hours. Number three, caring about the company as much as a founder does. And hey, by the way, here's how we show our thanks for that, by basically giving you a bigger wedge of the organization. And also, we're going to be super clear. We're going to be super honest with you. We are not going to hide in our offices and pretend like we don't hear our employees and just focus, frankly, on hiring new ones. We are going to, basically take care of our tribe, of the people who kind of got us to this point, and look after them. So that would be my suggestion. Be real with your people. Talk to them a lot. Give them a bit of a kick and a refresher, so everybody feels like they benefited from this heavy lift. And yeah, take it from there. That'd be my 2 cents.
Great, thanks so much, Jeff, on that. From my perspective, so yeah, this is in the past, a lot of the times I was drafted into startup hiring just after that Series A funding, so just as the money had hit the account and they were starting to scale. So, and what I always found is, really top talent does not leave because of money. They leave more around sort of meaning or growth, or the trust in the sort of CEO or the leaders of the business. It has weakened at some point. So I think it's a lot around more of a cultural drift than any sort of or cultural drift, and more of a psychological distance where people do leave rather than it being for money. So I look at these sort of 3 things. So first is kind of just locking in clarity. Tell people exactly what the Series A changes mean for the business and for themselves. I always found kind of uncertainty around this creates a lot of exit type based conversations. The second would be to tie talent into the mission. So it's not just equity, and that's going to be helpful, but tie into the mission. I think what I found, high performers really stay where impact is visible, ownership is real, and decision making is close to the business, and everyone's a part of it. And the third bit is we sort of create growth paths. So look at employees and what they can become in the next sort of 6 to 12 months. And I think always found like alignment with the business's values are far more than anything from around compensation. So yeah, that would be my sort of quick sort of overview on that, and hopefully it's helpful.
Is it me now? Yeah, I'm not sure I have that much more to add, but I think, after a high profile round, you will definitely get talent attention. I remember when I worked for Yieldify, which was a company in the martech space, a SaaS company, like over 10 years ago. But again, when we got Series B, we definitely started getting talent attention. Well, me personally as well, but also a lot of people who are working for us. So I think you definitely can't fully prevent poaching, but you can also kind of make leaving feel just not a good idea, and I think already talked about, I think it's that good mix of equity structure, day-to-day kind of retention hygiene, career narrative. So firstly, making sure everyone has clear vesting, refreshers for high performers, and just a credible path to a meaningful upside. I think a lot of companies think that the initial option grant is enough, but ideally you want to offer a little bit more. And if you also can't offer more cash, you can maybe use retention levers like milestone-based option top-ups or retention bonuses for critical roles, and they could be tied to 12 to 18 months goals. Also, in bigger companies that might want to try to poach your people, they obviously they win on comp and prestige, but as a startup, you will win more on autonomy and impact. So make your value proposition very, very clear. Like, here's what you will own, how your work moves the business, this is how your role grows post Series A. I think people, not always, but people most often stay when they can see a future and when they feel recognized. So I think that will be also very important. And also control the narrative after the round. So funding creates a lot of hype externally, but at the same time, internally, it can kind of like trigger some uncertainty. Will they hire above me? Will culture change? And culture probably will change. Will I still matter? So again, address that heads on in a team session. Share the plan, what changes, what doesn't, why the team is essential to the next phase. So if you combine that clear growth roadmap with fair equity refreshers and genuine career progression, I think you won't maybe completely stop it, but you will definitely reduce the churn. Or the attrition, I should say.
Thanks, Margaret. I think that I don't think there's a lot that I can add to this. What I would say would be, you can't stop people being approached after a funding round or in general, but you can try to make staying the better option, and culture plays a huge role in that. Giving people a real skin in the game while you're fundraising through the equity actually is one of the levers you could pull. But it only works when it's handled with absolute transparency. Equity conversations should always be followed up in clear written terms so people understand what they own, how it vests, when they can realistically expect anything, if anything, because sometimes it's like buying a winning lottery ticket, but you never know what it's going to pay out or if it's going to pay out, and what staying longer actually means for them. That trust is foundational to culture. And I think, as my peers have mentioned earlier on, you do need to have that visible progression. Even at Series A, people want to see a clear career path linked to tenure and contribution, not vague promises. A lot of startups make the mistake of not having HR people working with them or supporting them at that stage, thinking it's too expensive. But I would actually argue that one of your first hires should be somebody that understands people operations, people strategy, that can really help to advise you to make sure that you're building these things properly. When people can see that staying 2 or 3 years leads to increased scope, recognition, or reward, they're far less likely to jump ship. If you give vague promises and nothing is tangible and it's all wishy-washy, nobody's going to stay. It doesn't matter if you're promising them 10 billion at the end of the week. If it doesn't sound like something that's achievable or tangible, it won't work. Culture is then reinforced day to day. So strong leadership, giving people autonomy, providing learning opportunities, recognition, public recognition when possible. People stay where they feel invested, not just compensated. Anybody can offer high salary, but these days people are looking for more than just salary. It has to be the whole thing. So retention is really about alignment. So between equity, career progression, the culture, when those are clear and consistent, bigger players become less tempting. They don't even feature on your radar. That would be my suggestion.
Thank you very much. Not sure if you've noticed, but lately I try not to get involved with advice because there's a reason why I get some of the best people in our ecosystem to join us. But I can't help it but pretty much kind of focus on two things. One, sum up what the amazing panelists have said. So treat people right, give them the opportunity to grow and take accountability, and also pay them right. On the other hand, two things that are worth mentioning is that one, I see this happening even before big raises, but especially after, where founders expect their people to see that startup like it is their baby too. It's not. It is your baby. And we get it. You have to work 25 hours a day. I do, unfortunately. But you shouldn't expect others to do that. But something I see happening almost every time when there's a huge raise is that often founders think that huge raise is going to solve all their problems, when actually, it's more often than not, it's completely the opposite, because it opens so many other avenues and cans of worms that you completely forget. And I actually have seen perfectly good founders become, I'm not sure if I'm allowed to say this on air, but arseholes after that race, because then you have a ton of other problems. So bear that in mind, basically, and try to kind of remember why you started this in the first place. Right, we've got 19 minutes to go. We've got time for a few more questions. If you're on the live streams and want to ask us, you'll need to be here on our Microsoft Teams call. Quickest way to do that is to go onto our website, startuptoscaleup.club. Again, startuptoscaleup.club. You'll see today's session, which is, if you scroll down, and that session is Startup Talent Q&A 179. You click join. It's a quick registration on Luma. There you'll see today's link, and being audio only means you can join us from anywhere, via any platform or device. Once you're here, put your question in the chat. We'll give you the mic, introduce yourself, and fire away with that question. There are no wrong questions, and there's no need to be shy. It's a learning curve for us all. Today's question can be on anything to do with that people journey of startup founders. If your questions, though, are on other matters, please bear in mind that we run a few other sessions. So Mondays, as you can see, today's talent, but then Tuesday's product and tech, Wednesday's growth, Thursday's fundraising, second Friday of each month is UK startup law, and third Friday of each month is UK startup finances. They're all from 12 to 1 p.m. UK time. They're all available on our site, startuptoscaleup.club. And now we'll move on to our next question. I'll put that in the chat and I'll read it out loud for the live streams. So, as the co-founder of a pre-seed agritech startup in Norwich, focused on building AI-driven soil analysis tools, we're challenged by a lack of industry recognition and limited funds. And they put limited funds in big, bold letters on the message that they sent. So this impacts our ability to attract highly specialized talent in environmental science and AI development. What are some grassroots, low-budget recruitment strategies that can help us engage talent passionate about agricultural innovation? Additionally, how can we leverage local networks or academic partnerships to find skilled individuals and keep our recruiting pipeline active, despite minimal brand awareness? This is amazing. I'm sure the panelists will have some absolute gold here. But I'll save my 2 pence for the end. So maybe we can start with James, then Margaret, then Rosie, and last but not least, Jeff, please. About a minute each if you can, Tim.
Fantastic. Thanks so much, Anton. So yeah, this is a great question. I have no experience in this industry, but I'll try sort of an answer based on kind of an overview of what I think would be best. So I don't think it's ever a lack of brand or lack of budget are the problem. I think when you're at pre-seed, you're never gonna be able to compete from a salary perspective when bringing in talent, but where you do win is a lot more focused on the mission, proximity, and proof of thinking. So I would look at sort of maybe these 3 areas to initially focus on. So first would be to recruit in public. And so it'd be like really sharing real world problems that you are solving, whatever that looks like. Obviously in industry, you're talking, it could be, like soil data, or any sort of models or trade-offs, anything, or any particular failures you're coming across. So I always feel as that mission-driven specialists, really follow work that matters. So I think with that information, you can maybe start to, gather an audience of people who are interested in what you're doing. The second part would be about building partnerships or micro partnerships. So engaging with local universities. It could be looking at research labs. There may be some, again, don't know, but things like agricultural hubs in the area. Look at maybe doing some guest lectures somewhere. So I always find if you can have a really strong, maybe academic relationship, it will be obviously a lot of kind of applications which are just coming in. And then the third part, I'd say, offer, short, maybe paid problem sprints, look at research collaborations, just sort of look at that type of work. So that would be sort of my sort of emphasis, where you can keep the pipeline as active as possible, but with people who are very keen and interested in what you're doing. So that would be my answer for that. Thank you.
So yeah, if you are a pre-seed with low brand awareness, you definitely won't win by just posting jobs and waiting. You probably won't get any relevant applications. So I think it's about going where that kind of talent already is, and then offering them a credible reason to join early. So I would also start with sourcing. I don't know, you probably don't have a recruiter, but you might just have to do it yourself, like even on LinkedIn, So you want to kind of like do some grassroots sourcing that feels personal and not just like generic, recruitment messages. So build a short list of 30 to 50 people, who are already working in like soil or climate or agronomy or, whatever, and then just reach out with like a really tight message that's personalized to each person, like what problem are you solving, why it matters, what you built so far, and also the specific challenge that you want their help with. So you will get much better responses if you frame it as a mission and kind of like a technical puzzle, not a job advert. And potentially consider some try before you hire project. So maybe like a paid micro project, that takes, 10, 20 hours. That could be cheaper than months of recruiting, and it's a strong filter for motivation and fit. But obviously it has to be paid, if you're expecting someone to spend 10 to 20 hours. Definitely academic partnerships could be great for that pipeline engine, so probably have some universities or research centers. So you might want to create one clear partnership offer. So for example, a student project, a dissertation topic, or a part-time research assistant role, or maybe like a joint pilot with local farms. If you can actually give researchers access to data and a chance to see their work deployed, I think you will potentially attract serious candidates even without big salaries. So over time, that kind of one maybe lab contact could turn into referrals and internships and hopefully a steady stream of talent. And just finally, like you want to keep that pipeline warm, considering like let's say you've identified these people. Maybe you can run a quarterly online meetup, maybe you can run a webinar on like topics relevant to what you do, maybe invite local researchers or farmers or engineers, and then you collect signups. So it costs nothing or almost nothing, it helps you build legitimacy, and also it hopefully creates a pool of people who already know your mission when you're ready to hire. So it's not about volume as such. I think for a business like yours, it's just about building a small but high quality network that compounds over time.
Thanks, Margaret. So I would say, especially pre-seed, limited budgets, real constraints, and agri-tech. The good news is that the talent you're looking for is often mission-driven, as you've already heard. They're not logo-driven. So as Margaret and James have already mentioned, grassroots recruitment works best here. So you need to go to where your people already are. So the academic communities, the science networks, open source AI forums, online groups, LinkedIn, local meetups, etc. They don't cost a lot cash-wise. It does require time, but it gives you access to people who generally care about agricultural innovation. As Marcus mentioned earlier on, universities are a huge asset as well. So building relationships directly with lecturers, the PhD supervisors, research centers, rather than just the careers teams. Student projects, research partnerships, internships, etc., grant-funded collaborations, all of these can sort of keep your talent pipeline active before you're ready for full-time hires. I also think that sometimes pre-seed and startups in general miss the opportunity to sort of grow their team. You may not be able to find who you're looking for, but you could help to create that person. So running internships, whilst people are actually studying but having fractional positions for them, you just have to create the opportunity for them, but you have to deal with the logistics of that because they're going to be studying full time but working for you on a part-time basis. So you're going to have to invest that time as well. It takes time, but it's, I would say it's high reward. It's a proven method. So I think if you're willing to do it, you should. Another approach I would also say is to start with like a low commitment engagement, if you like. So short projects, maybe pilots or sort of advisory roles, which then eventually will convert into long-term relationships once that trust is built. And be very transparent, as I said, about your stage, your mission, the learning opportunity, what you're actually able to offer, because when you can't compete on salary, you compete on purpose, exposure, impact. The work needs to be interesting and meaningful to the person that you're trying to bring on board. It's the kind of challenge we see a lot when working with early stage teams, and we're always happy to offer obviously free consultation through Rose's People to help founders think creatively about people and hiring strategies without over engineering things. So yeah, good luck.
Sorry, here I am. Look, nothing more for me to add. You guys absolutely crushed it, and very much my thinking as well. So let's we can move on to the other question. Kind of squeeze that in. That'd be great. Thank you.
Brilliant. The only thing I'd like to add is utilize the people you already have. Find a way to increase, let's call it, their ambassadorship. And two, one thing that I've seen work well for me, at least in the past, more working for other startups rather than my startups, I have to say, is building relationship with universities to do two things. One, to go and give talks in the classes where they have these potential people that you can hire. And two, to go to various open university events, sort of open recruitment and all that jazz. But also, they often have, especially for year two, if I'm not mistaken, but even others, they have mock exams and mock interviews and things like that. Get in there, be on those assessment panels, build that relationship, and you'll see that you'll start getting applications and connections on LinkedIn from these people. Right, we've got 7 minutes to go. I think time for one more question. Let me just find it. Bear with me just a second. Almost done here. Right, okay. Just a second, please. Right. I'm going to post it in the chat for the panelists, but I'll read it out loud for the live streams. So this is question is this? Question, so I've gone from question 2 to 4, but basically I'm in question 4. Anyway, here we go. 5, what am I doing? Never mind, I'll read it out loud, and I'm sorry. I'm messing up, aren't I? Right, a bit cranky today. So I'm the main co-founder of a seed stage health and wellness startup in Belfast, focused on creating wearable devices that monitor and promote healthy posture. As we expand our team of engineers and wellness consultants, we're looking to implement a talent management framework that supports both career progression and role clarity. What specific processes should we prioritize to ensure clear performance tracking and structured development plans? Furthermore, how can we maintain flexibility in these processes to adapt as our team and product offerings evolve? That's an interesting one. Maybe we can start with Margaret, then Rosie, then Jeff, and last but not least, James. And again, if we can take about a minute each, please, Dean, that would be great.
Sure. So At seed stage, talent management really only works when it's very lightweight and consistent and built around role clarity. So really the first thing I would do is to define what good looks like in each role. And we've done it for all the roles at Mixmax. So create simple role scorecards for engineers and those wellness consultants that outline core responsibilities. What are the success metrics? What are the expectations at each level? So say junior, mid, and senior. And then you can run a basic performance rhythm. So maybe monthly one-to-ones, focus on priorities, blockers, and growth, and then have a quarterly review that looks at outcomes delivered and behaviors aligned to company values and also areas to improve. So that gives you clear tracking without feeling heavy. And then in terms of development, I would just keep it very practical, tied to what they actually do on a day-to-day basis. So each person should have a 90-day growth plan with 2 or 3 skills that they are building, the projects they will use to build them, and also what progress looks like. So engineers, for example, might grow through ownership of a feature area or system reliability or shipping velocity. Wellness consultants, I don't know, maybe like client outcomes or consistency of user feedback. So just keep everything visible in a shared doc on a Notion page. So it's easy to track, update, and then discuss. And just finally, to stay flexible, just review role scorecards and development plans every quarter and just adjust them based on what the business needs right now. So I would avoid locking people into very rigid job ladders too early in a small company. Just focus more on growth through expanding scope and ownership and not just titles. So if you keep the framework simple and review it regularly, you will get that structure and clarity without losing the agility that you need at seed stage.
Yeah, that's a brilliant synopsis, Marianne. It's Jeff again. I think you're absolutely right. It's seed round. Look, everybody is expected to be extraordinarily real with each other. There should be very little, if any, bureaucracy around this, and certainly no bureaucratic corporate speak with regard to these things. So look, clarity is really, really critical. I know it's hard, and sometimes you have to kind of deal with some potentially ugly truths when you're having to be clear and transparent with people, but it's much more important to be honest than it is to be hiding anything, especially at this very early stage. So just be really clear with people about what is expected of them and be realistic as well. And make sure that they are part of that conversation, that they're not just being told how to do things. But it is important to share like what it is you generally, kind of expect and what the culture of the organization is doing. It's really important too to kind of like help people see the future of the company. So be really clear about what your growth vision is, and do yourself a favor and check it, make sure it's always ever right, and then repeat it a lot because people really hold on to that stuff, especially when time gets tough. Start with, again, I think Margaret kind of mentioned this, but this notion of crystal clear role definitions. This is not about having an HR department and being hyper compliant and rigid, with job descriptions. But what we're saying, I think, is when you create a job description for people, make sure that you include what the key performance indicators are. How is this job and its outputs going to be measured? Also include, any kind of objectives and key results, for the upcoming year. And just be really clear about what is expected of this role to deliver. A lot of times people don't do that. And it's a really ugly surprise. Great to get a new title, great to get what is perceived as a promotion, but then you open up the bonnet and you look underneath and you're like, oh dear God, I have to do all of this? I had no idea. And that can really kind of suck the life out of an individual when they're kind of going through this. So be really clear about core responsibilities, what success metrics and what kind of key results are expected of them. And used outcome-based performance tracking, okay? Be super careful about your own personal biases, about issues related to recency or halo effect or any of those kinds of things. Be really clear about measuring the effect of the outputs and the timeliness of those things, and just be really clear about communicating, how it is you perceive those things. I'm going to be quiet from here on out because I'm sure our next 2 panelists will have more interesting things to say, and I've overrun my time. Thank you.
I can't recall if I was next or not, so I'm just going to go for it. Apologies, James. I think for me, I would say this is one of those questions where context really matters. The right talent framework depends heavily on the stage you're at, the roles you have today, and how work actually gets done. What works at Series A can be completely wrong at seed. At seed stage, people don't need complex frameworks, as we've heard already. They need clarity on role expectations, how to succeed, how is success defined, right now, how progression might look as the company grows, that sort of thing. That clarity is what then creates that culture. The risk with generic or off-the-shelf HR frameworks is that they look good on paper, but they don't reflect reality. So they often get ignored. Culture doesn't come from documents, as we know. It comes from how decisions are made, how feedback is given, how people experience fairness and trust day to day. It comes from the behavior that is allowed day to day. That is what then becomes your culture. This is also where founders should be realistic about their own strengths. Not everyone needs to become an HR expert, and there's real value in bringing in a people SME, even if it's part-time or fractionally, to just help talk through or design something that's proportionate, practical, and aligned to your stage. When people processes match the maturity of the business, then the clarity helps to drive the culture, and then the culture drives the performance, engagement, and retention, etc. This is definitely one of those questions where I wish the person asking was here.
Amazing. Thanks so much, Rosie. And I think between Rosie and Margaret and Jeff, they've given excellent sort of advice on this. So I don't know how much more I can add, but I'll just obviously re-clarify some of the stuff. So yeah, the goal here, especially in seed stage, is clarity and kind of what people have already touched on, not bureaucracy. So I would just look at kind of three areas or three processes to look at. So I think the first would be, define outcomes, not just activities. So look at each role and we define 3 to maybe 5 outcomes tied directly to that role, which are product or have a product or customer impact. So then performance tracking just becomes very, very, very sort of simple. I think the second area would be, those quarterly growth conversations. So again, just 3 questions: what's working, what is blocking progress, what skills matter next. Just creates progression. It's not rigid. And then I think probably the third area I'd look at is separate the role clarity from it being too rigid. So again, touching on those 90 days review, looking at sort of contribution, just keeping responsibilities really clear. So yeah, I think it's just keeping flexible and keeping everything kind of as versions. So look at roles and career paths and metrics and look at the version 1 of that, and then obviously it's an iterative process as things continue to grow. So that's what I would say. Strong teams I think scale when I think expectations are very explicit and growth feels intentional rather than structured, and I think this reduces a lot of anxiety and keeps momentum moving forward fast.
Thank you very much to all 4 of you. We are now 3 minutes over the line. If you've got time, I'd appreciate some parting words. Maybe we can start with the ladies of the house. All right, so Rosie got to go, and Jeff as well. Perhaps Margaret and James. Margaret, any parting words from you?
Sorry, just had to unmute. Well, no, just thank you everyone for joining today. I hope that you're leaving with a few ideas that you can apply immediately, and at that early stage, small improvement in hiring and clarity and communication really make a big difference. So just wishing you all the best as you grow.
Thank you very much, Margaret. James?
Yeah, very similar. Thanks so much, Anton, for having myself. Obviously, thanks for the other panelists, obviously Rosie, Margaret, Jeff. Fantastic answers. It's great to be a part of it, and hopefully we've all contributed in a way which helps these businesses grow to the next level.
Here. Well, thank you very much to all 4 of you, and of course, especially the 2 of you that are still here. Thank you to everyone that tuned in, those on the live streams. I've just been receiving messages. Some of the live streams have had some issues, so maybe LinkedIn didn't work very well today, unfortunately. Nevertheless, thank you to those of you that sent questions. Next time, please join us here interactively on Microsoft Teams. It's audio only, which means you can tune in from anywhere via any platform or device. Couple of quick things before my parting words. Number one, we currently run 6 regular sessions. On Mondays, it's talent. Tuesdays, product and tech. Wednesdays, growth. Thursdays, fundraising. Second Friday of each month is UK startup law. And third Friday of each month is UK startup finances. They're all from 12 to 1 p.m. UK time. They're all available on our site, startup2scaleup.club. And actually, when you go there, you'll also find today's session and future sessions that you can RSVP. But also, we've got a WhatsApp community at the top and bottom of our website. There's a WhatsApp icon you can click on and join any of these groups that you can connect with fellow founders, investors, operators, and of course, our second to none panelists. Now, in terms of my parting words, just remember that the startup journey can be both exciting but also quite challenging. So try to have some fun in the meantime and be kind to yourself and everyone else for that matter too. Otherwise, hopefully you'll be able to join us tomorrow here on Microsoft Teams for Startup Product and Tech Q&A, where we have some amazing panelists that will be able to help you build that early stage. I guess that's pretty much it. Yes, another thing, this has been recorded, as we always mention, and will be edited and soon launched as a podcast version. So keep an eye out on our WhatsApp community, but also LinkedIn for the links to YouTube and Spotify. With that in mind, thank you and God bless. Bye-bye for now.